Welcome back. Now, the fifth edition of the CRISIL India Infrastructure Conclave is currently underway, and this year's theme is Navigating India's Decarbonization Journey. To talk more about it, we have Rahul Prithiani, Senior Director and Global Head of Energy Sustainability and Consulting at CRISIL, now joining in. Rahul, thank you very much for joining in. This is Reema here. First, if you could share the key findings of your report. This is the fifth edition, the fifth year, I believe, and what has changed from last year to this year?
Good morning, Reema. Pleasure to be interacting with you and all the viewers. So I think this year, what we do is every year we come out with a key theme in the infrastructure space, which is driving overall investments. And given where we are in terms of the energy consumption and growth journey and India's emissions, we are the third largest emitter globally. And going forward with our urbanization drive, investment in infrastructure, push towards manufacturing, our overall emissions are only likely to increase. And given that there'll be global pressure on India to act, decarbonization becomes very, very critical area. And given government's focus on, trying to drive decarbonization through various measures, we are expecting over the next 5-6 years till 2030, an overall investment of roughly 31 lakh crores in green investments, which will provide huge amount of opportunities for players in the renewable space, the EV ecosystem, players with emerging technologies such as green hydrogen and CCUS. Of course, there are significant policy challenges, but significant amount of opportunity going forward.
So you're saying, by 2030, we will require investments of 31 lakh crore in green energy?
Yes, it's all green investment, not
all
just
green investments. And what is the current state of funding right now? How easy will it be to get this 31 lakh crore? And outside of, say, renewables, energy, utility, and EV, in the other sectors, which may be carbon intensive also, like agriculture, manufacturing, we haven't seen too much by way of investments. Do you see that picking up?
No, so I think as per our understanding and what we have kind of, analyzed for established technologies where, we've seen where cost economics is working, like renewables, and renewables as well as, EV ecosystem. I think there clearly funding does not seem to be a constraint where, again, we'd see more and more debt funding coming through the banking channels, through DFIs going forward. And also from an equity standpoint, I think we'll see a lot of, operational assets getting monetized as we move ahead. So with those monetization of operational assets, there'll be adequate equity to invest in future projects. But as far as some of the emerging areas are concerned, like CCUS, like green hydrogen, like battery storage or advanced cell chemistry, now in many of these areas, I think funding will be a little bit more difficult. Here, I think the government has to play an important role through a mix of, incentive grants from their side, plus work a lot with multilateral banks as well as foundations to get in blended finance to ensure there is adequate equity and de-risk projects going forward. And also at the same time, we will have to do a lot to kind of continuously attract climate funds going forward, so that there is enough investment opportunity in emerging technologies, which is what we can fund going forward.
Understood that, Rahul. Rahul, you've mentioned clearly about the kind of opportunity. If I could, ask you to break down within the renewable energy value chain, which segment do you expect to see the most amount of spends in? And on that particular basis, which sector or which particular part of the value chain will you be most excited on?
So if you look at the entire renewable space, over the next few years, we are saying almost, 19 lakh crores of investment will go in this space. So primarily, it will be generation on the solar and the wind side, which will see good amount of investments going forward. Also, there is a concomitant projects which are linked to storage. As 24/7 green power takes more and more prominence. So storage related areas again will see a good amount of investment as we move ahead. So those two elements within the renewables, plus there are also areas such as smart meters as well as transmission with the green energy corridors coming in, which collectively will drive the overall investment. And on the EV side, again, it is the manufacturing capacity itself, and again advanced battery as well as cell capacities, which would again storage capacities, which would drive the overall investment.
You said that there is a significant opportunity for financial investment over here, but it has to make commercial sense. What are the kind of returns investors should expect, or what is the kind that they've already made by investing in our green economy and sustainability and climate change circular economy?
So, Reema, the picture here is mixed, as I said. In some of the established areas, such as renewables, I think there is good amount of opportunity for EPC players. I think there's good amount of ordering, there's manufacturing, etc. that is going on. So I think we will see good, healthy returns like what you would see in their normal EPC businesses. As far as a project implementation is concerned on the renewable side, I think typically we see returns in the range of about 12% ROC kind of returns, and again depending on how you financially leverage and the cost of your funds, you can have higher returns also going forward. In some of the other areas with respect to EV batteries, I think it's a more longer term play. As you expand capacities and achieve scalability, I think you will start seeing a bigger expansion in returns going forward.
Understood that, Rahul. Rahul, a couple of concerns also have come up as far as the renewable space is concerned. Recently, a bid that was won by JSW Energy, in a reverse bidding auction process for a battery energy storage system, the tariffs were not approved by CERC. So, do you consider this as a risk, as far as adoption of green hydrogen battery energy storage and the renewable space is concerned? How should investors look at this particular space, and would you look at it as a fixed return space, or there are so many hurdles to actually go through?
No, I think clearly in the entire green investment space, there is a lot of a very strong role that policy has to play, and policy flexibility is one of the key fulcrums on which this entire space is going to rely on going forward. So clearly, offtake mechanisms to ensure that there is adequate offtake is absolutely critical. So timely availability of PPAs for DISCOMs, extremely critical. I think the government is facilitating incentives, etc. But some of these offtake agreements, the on-ground nitty-gritties at state and center level will be very important.
In terms of funding, Rahul, what we understand is that at the very early stage, when checks are being cut out for 2 to 3 crore, at the lab stage, innovation, there is money. And then you've got it right, when the PEs come in, or much larger, $100 million, 115 EV renewables, etc. But the problem is that missing middle. So what are investors, what is your conclave doing about that to catalyze that financial investment in that missing middle?
So I think the missing middle has to do a lot with, areas such as blended finance, a stronger role of multilaterals, foundations, as well as, government helping in de-risking projects through policy, through their support in terms of, capital. So we are looking at kind of, channelizing thought process in that area, which can, collectively kind of, help sort issues. And we have seen cooperation, and there is willingness both from multilaterals also to come in for emerging areas such as CCUS, support industrial decarbonization, which is a very large challenge that everyone faces. Also to support energy efficiency related initiatives. The government on its own, you've seen, has kind of is supporting the DISCOMs through smart metering under the RDSS program. So many of those initiatives have been undertaken. It's just that we have to accelerate and mainstream some of them to a much larger scale.
Thank you so much for joining us. Thank you so much for sharing, the key highlights of the very good report that you've come out with. Well, moving on, time now for a short break. We'll tell you what the street expects from HDFC Life and L&T Tech Services ahead of their Q3 numbers.